Welcome to the Anchor Your Retirement podcast. I'm your host on this first day of spring, Barbara Gullen, hanging out with my buddy and pal, Tony Shore. How are you doing, Tony?
Well, I'm excited about spring, and
Yes.
I'm in the studios up here in Minnesota, up north.
Yes.
And last weekend, at where I live in Stillwater, we got 11 inches
Uh-huh.
and of snow. And this Saturday, it's going to be in the 70s.
Yes.
And sunny. So I am excited. It's going to hit 60 today. It's already sunny. It's already in the 50s. And we're headed there. How about you? What's Kansas like right now?
Well, last Saturday, I mowed my yard and I washed my car.
Right.
Last Sunday, we had an inch of snow. Monday morning, we woke up to sub-zero wind chills. So all of the spinach that I planted is now dead. And today, we're pushing 90. So
It's crazy.
It
The
is.
weather's gone
It is.
insane.
But, there's just so much going on right now in the world.
Yeah,
and we're
there
going to
is.
talk about the good things going on in the world. We're going to talk about upsets in the NCAA basketball tournament.
We already
We're
have
looking at
upsets.
you, Wisconsin.
Yeah, we already have upsets. What's
Yes.
going on?
Fun fact, this was the University of Nebraska's 9th trip to the NCAA tournament, and this is the first time they've won a game.
Wow.
So I'm pretty sure I heard
Is that
them
the
from Lincoln.
Cornhuskers?
The
from Lincoln?
Cornhuskers, yes.
Yeah, that
yes.
used to be. I used to always root for the Cornhuskers in football anyway, because I grew up in Minnesota.
And
So-
they used to be a team.
And Minnesota doesn't have any good college teams. So I always rooted for.
I guess you don't.
No, the Gophers. Have you ever? Our listeners have never even heard of the Minnesota.
But I was like,
Gophers.
there's some M state up north that has good teams. That's Michigan. So,
Yes, that's
anyway.
Michigan. But Minnesota, unless you're talking about women's hockey, we have a great college women's hockey team. We also have a good, sometimes men's hockey team. Other than that, Minnesota college sports are non-existent.
Yes. Okay. And
so-
let's talk about how the men's Paralympic hockey team also won the gold.
Yes.
And we swept gold.
Yeah.
So,
yeah.
yes,
Our Paralympics are amazing. Yes.
They were a fantastic team.
We
They
always
are a
have the best
fantastic team.
Paralympic teams. They're fantastic. And the U.S. supports it like no other. I think that's
Yes.
fantastic.
And by the time this show airs, baseball is opening.
Yeah.
I'm so
the
excited.
Royals. The
Although
Royals.
the World Baseball Classic was just phenomenal to watch. That was
Can you
a blast.
believe Venezuela, a big upset over the U.S.?
Well, considering that Salvi plays for the Royals, Salvador Perez, who was their
Yes.
team captain and catcher, it was just fun to watch all
They
of
have
them
an
play.
amazing team. Yeah,
They have
I
an
love-
amazing team. Italy
Yeah.
played so well again with a couple of Royals players.
I know. Isn't that crazy? I didn't realize. I'll be honest. I don't follow baseball that closely. I didn't realize there were such great players that were from Italy that were
or
Italian.
claim Italian heritage.
Yes, or claim
obviously
Italian.
with a last name like Pasquantino or Caglione.
Well,
you
true.
can't
Yeah.
not
I mean, I
deny
know
it.
they have some heritage. I obviously
Yeah.
assume that, but that's pretty amazing. That some of these countries you expect, I mean, it's like Norway always wins gold in cross country skiing because they invented it. Right.
Yes.
And it's actually a form of transportation.
But we're very not obvious in the World Baseball Classic. Yeah.
Yeah. But U.S. Baseball's our sport. So you'd think we would always dominate it, which we have. But a lot of
It was
obvious
competitive this year. It was great.
and obviously Central America and South America baseball is pretty big in a lot of these countries.
It is. And I'm very partial to all of the memes I have seen on social media about Bobby Witt being able to cover everything. Bobby Witt Jr.
Yes.
He's the shortstop.
Yeah.
So, but alas, people get upset if we just talk about sports all day.
Right. We're actually talking about, you said you wanted to call the show Clearing Up TSP Misconceptions.
Yes.
You told me that, and you just said it like that. And I said, oh, yeah, I can talk about that. And you're like, okay. And because I thought what you meant by TSP was Tony Shore's Pizza. I thought I could have sworn, Barb, that when you said we're going to clear up some TSP misconceptions, I bring up pizza a lot on the show, right?
You do.
And I love pizza. Everybody knows it. So I just thought, okay, if there are misconceptions out there about my pizza habits and what I like, don't like toppings, but no, we're talking about
The
thrift
thrift
savings
savings
plans.
plan. Yes,
Yeah.
federal employees, it's their version of a 401k. And there have been so many changes that have gone on lately that I just wanted to hop in, because there are a lot of federal employees that retired
Yep.
last year with the fork in the road options and all of that. And a lot of them, their effective retirement date was December 31st of 2025. So a
Sure.
lot of them are still waiting for their pensions to start.
Yikes.
Not everybody is, but the OPM, first of all, had a reduction in force and is so bogged down with the influx of retirees because approximately 10 times the number of people retired as normally do. So you might be trying to figure out if you need to access your thrift savings plan to get a little money to hold you over until your pension starts. But I want to talk about how to do that and how to do that wisely. Because again, they also introduced a Roth conversion option to the thrift savings plan this year. But there are rules around that. So, and investment options. Let's go back to the beginning. Let's talk about what you need to do to access your thrift savings plan if you need to pull some money out.
Right.
If you have not rolled that money over into an outside IRA, and if once you've separated from service, you can roll that over at any age. However, if you are not 59 and a half, if you retired younger than that because you hit minimum retirement age or disability or whatever circumstances those were, you can access funds from your thrift savings plan from age 55 to 59 and a half. Or if you were an air traffic controller or law enforcement officer, age 50 to 59 and a half, you can pull money out of TSP without having to pay that 10% early withdrawal penalty that you would have to pay if you took it out of an IRA. So if you are under 59 and a half and you have retired, I strongly encourage you, if you're looking at rolling over money to an outside IRA, don't roll over everything. You're going to want to leave some money there, at least until you're 59 and a half, in case you have an emergency or need to grab some money. Now, what you need to know when you are withdrawing money from TSP is that if you're pulling it out of the traditional account, they are going to withhold 20% in federal income tax, whether you need to withhold that much or not.
Yikes. Yeah, that's the problem. It's a tax deferred account, right? So
Right. The traditional one is, the Roth one is not.
yeah. But so the traditional TSP, you have money in there. If you pull it out, you're going to have to pay taxes on it.
You are, which is why if you are waiting for your pension to start, if you're waiting for that interim check to come in, I would be frugal about how much you're pulling out of TSP because you are going to be paying taxes on that. That's going to get added to your taxable income. They will not let you put the money back in TSP after you start getting your pension.
Okay. So it's interesting. There are so many rules around this that obviously I'm not a government employee, so I don't understand it. But from what you've said and from the government employees I do know, they don't always understand it. And it's not these types of things that could be costly mistakes aren't
Right.
always properly explained to them, are they?
They aren't. I can't tell you the number of physicians that have come up to me after I have done one of my in-person federal benefits trainings, which we have one of those coming up at the end of April out in Leavenworth, Kansas. We'll be out at the Leavenworth Library. If you would like to register and come to that, please call our offices at 913-553-6222. We'll get you registered for that. But I have had a number of physicians and other highly compensated federal employees come up to me and say, gosh, I really wish I could participate in the Roth TSP, but I just make too much money. You can. the the ability to participate in the Roth thrift savings program or a Roth 401k does not have the same income restrictions on it as a Roth IRA does.
Right. And so that's interesting. And there's a big difference. So, are there recommendations you make? I guess it's probably based on personal situations on where, maybe they can overcome some of these possible issues by putting more money in one or the other, the traditional or the Roth,
Right, and I
and when
am
they
an
access it.
advisor, but I may not be your advisor, so I don't wanna cross the line into offering advice on the show, but I will say there's a time and a place for participating in the Roth TSP. There's also a time and a place for participating in the traditional TSP. With the Roth TSP, you are going to get that benefit of being able to withdraw that money tax-free after it's been there for 5 years.
Sure. And so, right. But the 5-year rule is
The
really.
5-year rule plays in, and you are also paying taxes on that money that's going into the Roth,
Hmm.
which means that you're going to have a higher W-2 at the end of the year if you switch over from traditional to Roth. For
But
some
that might
people,
might not be a bad thing if you're in a lower tax bracket or you've got room before you hit a
right,
higher tax bracket, right?
right, but if you are trying to qualify for financial aid, for college, for a child, those are all things that need to be considered before you make those decisions.
Yeah.
Which is why I'm not going to sit here and make a blanket comment that the Roth is the way you should go.
Hmm.
It's depending on where you are in life and what your circumstances are. It might make sense. It also might make sense to keep the money going into the traditional. And you need to understand that even if you are contributing to the Roth TSP, that your agency match and the 1% that they automatically put in are going to go into the traditional. So you can't put money in the Roth TSP and think that your entire TSP is going to be tax free when it's time to retire.
Hmm. Yeah, there you go. And I think that's why it's so important to work with somebody like yourself because maybe you probably, for a lot of people, it's going to be a balance. Like
Mhm.
you want to have some money in a tax free bucket somewhere, whether it's your TSP Roth or a Roth IRA. And
Mhm.
then you'll probably want to leave some. Obviously, you've gave a couple of reasons why you need to leave some money in your TSP.
After you separate, if you're under 59 and a half, absolutely.
Yeah.
After you're 59 and a half, that becomes a completely different discussion.
Yeah.
But January 26th this year, the TSP started offering the ability to convert your balance from traditional to Roth within TSP. And
Yep.
again, there are more rules that go with that. Again, any money that you convert, you are going to get a 1099 from TSP, and that is going to be added to your taxable income this year.
Yeah. So, and that
And
could be a
and and and
surprise.
and you have to pay the taxes on that conversion from an outside source. TSP will not remit part of your conversion to the IRS to pay your tax bill. You have to have money elsewhere to pay that tax bill.
Yeah, that's a big misconception or misunderstanding. People might get themselves in a bad situation there.
Right, because they think, "Oh, great. Well, I'll just go ahead and convert it all right now." Ouch.
Yeah, that would be rough, right?
If you've got 5,000 in your TSP, that's one story. If you've got 100,000 in your TSP or think you want to convert 100,000, you need to understand that you are adding $100,000 of taxable income to your bottom line this year.
And that's going to affect other things you might have going
Right.
on, other
Right.
subsidies or other things that you're paying less on now that will increase because your taxable income has gone
Or
up.
if you are doing this and you still have money in TSP after you've retired, it could affect your Medicare Part B premium next year
Wow.
with the income adjustment with
Oh yeah,
IRMA.
Aunt Irma
Our
rears
buddy and
her.
pal, yeah.
She's the mean aunt, Aunt
Mhm.
Irma, and what Irma means is if you have too much taxable income and you're a 65 or older on Medicare, that $202 Medicare Part B premium that everyone pays, well, not everyone pays that. Some people pay more, and if your
Right.
taxable income goes up for the year, if you have to pull out that $100,000 or convert it then
Mhm.
out of a traditional TSP, you could pay as much as $600 plus per month for
Yes.
that Medicare Part B premium could go up to $600 or more. That's
Yes, it
crazy.
could, it
Yeah.
could. So, again, if you are considering any kind of Roth conversion, don't how many times do we see crazy stunts and stuff on TV that they tell you don't attempt to do this at home? Um, don't attempt to do this without the help of an advisor or a fiduciary. At minimum, talk to your accountant. But I definitely think that if you are looking at converting from traditional to Roth, again, you are starting that 5-year clock with every conversion that you do.
So, yeah, and again, you're going to have a written out plan and somebody who knows all the ins
Right.
and outs and is doing all the math for you. But
Yes.
again, if your goals are different, your time horizon's different. I know a lot of government employees say, "Well, the buddy I worked with when he retired, he did this, and that's what I'm
Well,
going to do."
that's awesome,
I heard that from I have a relative, a couple of them who are
Yeah.
government employees, and I heard that from them once, and I said, yeah, no, I would work with somebody who specializes and knows about government benefits and
Mhm.
federal employee benefits, and make sure you get your own plan based on your own time horizon and your
Right.
own goals, because your goals and time horizon are way different than that guy's, right?
Absolutely. I mean, I have had the privilege of working with federal employees for quite some time. And there have been times when I have had coworkers that have come in and worked financial plans up for both of them. And one coworker invested very differently in TSP than the other coworker did. And the amounts that they had in TSP, even though they had worked comparable amounts of time, like within a couple of months of each other, were drastically different because of the investment choices that they'd made.
Right, and you're right. You have to make the right choices, and it just complicates things if you're a federal employee.
It
Although,
does.
although 401ks, 403bs, Roth IRAs, the rules keep moving and changing on these things as well. You also need a plan if you're in that situation. But wow,
Absolutely.
there are so many different rules for federal employees. It fascinates me.
There are, and, they keep changing some of these rules, and, a few years ago, they introduced the mutual fund window, which isn't something that's made for everybody because you significantly increase your fee structure by putting part of your thrift savings plan into the mutual fund window. So, while TSP's low fees make it an excellent accumulation tool, even with all of the things that they have added to it, it is still a little bit of a cumbersome distribution tool once you're in retirement.
Hmm. Yeah.
And, for some people, it makes sense to leave the money at TSP. For most people that I have encountered, it makes more sense for us to roll it into an IRA where they have more control over it. If
Or
for no
most people.
other Right. If for no other reason, because they are in a situation where they don't need 20% in federal income tax withheld. And
Yeah.
once it's in an outside IRA, we have the ability to withhold 12%, 14, 15%, something that's more in line with what their actual income tax rate is, so that we're not pulling that money out, creating a bigger tax bill, and then making them have to wait until they file their tax return to get that money back.
Yeah, I mean, and it's that kind of strategic planning and flexibility that you get if you do transfer that money over into your own IRA or
Mhm.
Roth IRA and do those conversions, because you have so much more control, and that way you can
Yes.
adjust more, and it can be more. It's managed money, then it's more
Mhm.
managed than your TSP, so it really helps. And having your own personal financial advisor who knows you personally, your situation, your family situation, it all plays a part. I mean, if you have a spouse, all of this is going to impact them possibly as well, and your
Yes,
family and your legacy and your estate plan. So it all ties together, doesn't it?
it does. And, you as a federal employee, you have on average earned 24% less than your private sector counterparts have.
Yeah.
The pension is one of those benefits that you have. The thrift savings plan is another one. But under working with somebody who understands how all of those things work together can be of greater benefit to you than trying to do it yourself or trusting the advisor down the street who doesn't have training in federal employee benefits.
Yeah. Yeah, there you go. Well, you know what, Barb? I bet a lot of our listeners have questions, and if they are federal employees, they really need to give you a call and let you look over where they're at, what they have,
Yes.
and their time horizon, and
Mhm.
and you can help them figure out what, can I retire? What do I need to do to ensure I don't run out of money in retirement? What should I be doing? And especially the more you have saved in that TSP, the more you need that plan
Yes.
to work with a trusted
Yes.
financial
And
service.
especially if you have a substantial TSP, that means you've been around a long time, which means you
Yes.
have a really decent pension and Social Security. I encounter many federal employees who are very diligent about savings
Yep.
while they were working, that they will actually have more take home money in retirement between their pension and Social Security than they had while they were working.
Yeah.
And
Yeah.
so then we start looking at long-term tax consequences and working toward building a strategy so that they can reduce those future taxes in retirement.
Yeah. There you go. Well, and that's what it's all about. Reducing lowering that tax burden.
Mhm.
You want to get rid of that tax burden. You want to have a plan, so you know where the money is coming from. When you need it, it'll be there. You don't have to worry if the market's fluctuating, those types of
Mhm.
things. If you want a plan like that, how can our listeners and viewers get that, Barb?
Well, they can always go to our website, bgwealthmanagement.com, and click on the button at the top that says request a consultation. And that will send your information to us, and we will reach out to you and get you on our calendar. If you want to do it the old fashioned way and call us, you can call us at 913-553-6222. Request the option for appointments and scheduling, and Christina or another member of our team will get you on the calendar with either myself or another one of our fiduciaries that understands how your federal benefits work.
Awesome. Well, Barb, I know you love hearing from folks, so I
I do.
encourage our listeners and viewers, pick up the phone, give Barb a call and her team there at BG Wealth Advisory. Awesome show today. A lot of
Thanks,
great
Tony.
information. I learned that TSP stands for Thrift Savings Plan and not Tony Shore's Pizza.
There we go.
All
You
right.
have learned something today, Tony.
No, I knew that,
I
Barb.
know you did. I know you did. We've
All
done a lot
right.
of shows on TSP.
We have, and our listeners and viewers can go back and
Yep.
watch previous shows on various topics if they have questions.
Mhm.
But better yet, pick up the phone, give Barb and her team a call. I'll give that number one more time before we go. It's 913-553-6222.
Yep.
All right, and that does it for today's episode of Anchor Your Retirement with our host, Barb Goen.
We'll see you soon.